Alright, I wanted to make this video for a while now, so today we're going to talk about checking your credit and getting penalized because you're checking your credit, if that makes any sense. My name is Isaac.Duenas. I'm a loan officer here in Cleveland, Ohio, and I wanted to make this video for a long time for the specific reason that a lot of people that apply for a mortgage, the first thing that comes to their mind is what's going to happen to my credit? Are they gonna pull my credit? I'm gonna get penalized because they're pulling my credit. My score is gonna go down. Is this a hard inquiry, a soft inquiry? What is the deal exactly? And there's a big misconception about the mortgage industry in general. What do I mean with that? Is that every day I come across people that they're like, number one, they don't feel confident about giving their credit, their social security number, the date of birth over the phone. But that's a different story. That's a different video. And I can address that actually later during this video. But one of my main things is like, well, Wells Fargo already pulled my credit. So I really don't want you to pull my credit again because that will lower my score. I will be double ding, and you know that I just my credit is my credit. Please protect my credit. I must protect my credit, dude. The reality is that the bureaus have given you the possibility to check your credit again for a 45-day window. So what do I mean with a 45-day window? That means that if Wells Fargo pull your credit yesterday, I can pull your credit today, and you will not be penalized again. You don't have to believe this. Actually, if you go to Google and you Google FICO 45-day window, you will read on their own website what I'm talking about. So why do they even do this? They do it because they understand that the only legit way for you to get a loan estimate is by having a credit report. I am not a fan of people who are like, well, what's your credit score? Is 560 or 600? Well, yeah. So you're gonna receive this interest rate, dude. That's a speculations. What I want to tell you, there's nothing real. There's nothing tangible. You can't put that in paper. You can't really justify the rate without pulling a credit report because the score, it's only one thing. What about the payment history on the mortgage? What about credit cards? What about student loans? Yes, the nightmare of a student loans. Because that's, whether you like it or not, that's a government product, or most student loans are government products. So good luck getting a government loan if you are behind your payments with the student loans, or if you're in collections, or if the student loans are frozen, or I could keep talking forever. But does that make sense? So the score is only one thing. And by the way, we're not talking about TransUnion, Equifax, or TransUnion, Equifax, and oh my gosh, you gotta be kidding. And the third one, which I always freaking forget the name, TransUnion, Equifax, and Experian, right? And normally a mortgage company will pull three, all three. And in my case, for Nations Lending, we pick the middle one, the middle score. And they use the algorithm of FICO 8. So it's not Credit Karma. It's not that you can go online and pull your credit and be like, well, don't worry about it. I have my credit report. So where do I email it to you? What email should I send it to? Or can I? No, dude, it just doesn't work that way. Number one is because it's not the same algorithm that mortgage companies use. And number two is because, dude, I don't know you. Like, what about if you're a professional in Adobe Photoshop? Can you just change the score? Can you just change? I mean, there's just a billion reasons. It just doesn't make any sense. What I found is that normally people that they don't want to provide their date of birth, social security, they don't want you to pull their credit, even though they know that nothing is going to be affected. it's normally people that they're hiding something. That's just reality. Maybe you're hiding that you're behind your mortgage payments. Maybe you're hiding your credit card. Maybe I really don't know what you're hiding. The reality is this: you're wasting your time. You're wasting my time. You're wasting everybody's time. Why? Because dude, you don't qualify. That's just a fact. You don't qualify, and you're living in this dream world that somehow you will qualify if I don't know that you are behind your payments. It's just no reality. It doesn't make any sense, man. Like, it's better that you're honest with your loan officer. It's better that you're upfront and you say, hey, just so you know, I was very sick a year ago, and I was not able to make my mortgage payments. And you're gonna find in my credit report like too late, or because of a high debt, I fell behind my credit cards. I was not able to pay my student loans, or whatever the situation is. If you're upfront with your credit and you're willing to share your credit report with the company that you're working with while you're shopping around, you will be able to find solutions. Sometimes, having a late payment on a mortgage is not the end of the world. One late payment, okay, one. Now, if we're talking about like four late payments in the past 12 months, that's a different story, okay? Which probably you want to be upfront about that too. But what I'm saying is that sometimes there's ways to go around your credit. There's ways to find solutions to a low credit score, to medical collections, to those student loans, to chapter 7, chapter 13. You know what I'm saying? Anyway, I hope this information helps. If you guys have any questions, please put it in the comment section and subscribe, thumbs up, and all that stuff. Thank you.